All right, you guys. All right. Just getting everything set up here for tonight. Thanks for joining us. I'm just going to give it one more minute in case a few more people want to hop in, but hope everybody's having a great week. Hope everybody's June is off to a good start. Pretty crazy that we're almost halfway through the year, and got some pretty exciting stuff to share with you tonight as we are kind of going into the summer months. Got a lot of good statistics, a lot of good tips and strategies that people are using right now to still succeed and win, especially here in the local Denver market. So excited to share all that with you guys today. I've also got a great co-host, Ben. I'll be introducing him here in a second. Let me get him on the screen. Hey, Ben.
Hey, Adam. Thank you for having me. Excited to be here. And we got a great presentation prepared for everyone and really excited to share.
Definitely, man. As always, I really appreciate all that you contribute to all of these. And I know the one we had a couple weeks ago was a big success and got a lot of value, especially out of some of the mortgage and lending specific stuff that you were sharing. So excited to kind of piggyback off that last one and share some of that same stuff and some new stuff as well with our audience tonight.
Yeah, again, very excited to be here. And I'm so glad that we're doing these every couple of weeks because there's so much changing as far as inventory. We were just having a conversation, before we went live here, demand, what are buyers looking for? What are they needing? In this Denver market, every market across the U.S. right now is very, very different. But, in this Denver market in particular, we're seeing a lot of interesting things. So I'm hoping that the information that we have tonight is going to bring value and help those that are interested in considering to purchase.
Absolutely. So guys, there's a lot of reasons why you may have, clicked on an ad to find us that way, or maybe you're already in our sphere, our audience somehow, and you found out about the Masterclass tonight. Whatever it may be, there's a good chance that probably one of these four are talking to you a little bit. And what I mean by that is these are four of the most common challenges that we're seeing right now in today's market here in Denver for just why a lot of buyers are struggling and maybe having a little bit less confidence than they hope to have when taking that big step to purchase a home, whether it be their first home or their 10th. Regardless of what level of skill that a buyer has, everybody's still got a lot of uncertainty at the moment right now. And these are kind of the four that we feel are some of the most common. So these four, just kind of run through them really quick. Big one is saving for a down payment. A lot of buyers struggle with the high down payment requirements in Denver's competitive market. Excited, though, to have Ben share about how it's not what you might think. You don't necessarily need to have 20% down as an example. So that's definitely the first one that we hear a lot. Another one is just this understanding the market, navigating these prices that are kind of, I feel like, at a pretty high point right now. We might start to see a little bit of a rebalancing, hopefully later this year. We'll see what happens with that. But also just the mortgage rates, they're pushing right at that 7% mark again this week, and some inventory challenges. Here in Denver, we're, looking at a little bit more of a seller heavy market, which is great for buyers. So we're going to talk a little bit more about why it is a great time to be a buyer. Also just writing competitive offers. A lot of people that have never bought a home before are a little bit just uncertain on how this process works, and more specifically, how to really make your offer stand out among others. We're going to talk through some strategies and some really cool tactics to really make yours stand out among any other offers that might be coming in when a buyer or when a seller is trying to sell their home. And then the last one is one that I'm excited to talk a little bit more in depth on, which is just how to find the right home. I've got a few people I noticed tonight that are on this call from out of state. So welcome, you guys, especially any of you that are from out of state that are joining us. This is a totally different level of sometimes uncertainty when you're not familiar with the different neighborhoods and areas of Denver, and just understanding, really what balance you need to have for budget, location, condition of the home, all of that good stuff. So those are kind of the four main ones that we're going to definitely do a really good job tonight of addressing these four. And then just also to remind you guys, we're going to have a live Q&A at the end of this where Ben and I can both help answer any questions you guys might have. So we're going to try and just feed you as much info as we can over the next 45 minutes or so. Just kind of information by fire hose, just give you guys as much as we possibly can. And then once we get through it all, Then we'll open it up to questions. And if you guys have more specific questions, or maybe you're not feeling confident or comfortable asking it here in a public setting, we can always jump on a one-on-one strategy session anytime after this and help answer those for you. All right. So why listen to me? Ben, I definitely need to have a slide created for you to brag about you. So that way, maybe I don't feel quite as bad about talking about myself, but I'm just going to hit a couple of these just to give a little bit.
Please do.
Just to give you guys a little bit of confidence in where this information and some of these strategies are coming from. Both actually, Ben and I both went to high school together, so we've known each other for about 30 years, but I'm a Colorado and Denver native, grew up in Wheat Ridge, Colorado. That's where Ben and I went to high school, Wheat Ridge High School. This past year, I was ranked 5th out of about 350 Denver agents with eXp Realty. Top 10% of Colorado agents, did about $8 million in sales last year. Got a few different certifications as well, especially the negotiation expert's a big one, really important to have a good understanding of how negotiation really works. And then also have a few different kind of extracurriculars. I've got a Living in Denver YouTube channel. It's about 125 videos now up on there. Really just help anybody that's considering moving to Denver learn all about the different neighborhoods, as well as just talk through more specifics on, how to find a great home here in the Mile High City, Denver, Colorado. And then Ben and I actually also have a podcast together. It's called The Pursuit of Progress. And we're coming up on not quite 100 episodes. I think we're about 75 episodes in at the moment. By the end of this year, We'll definitely hit 100. We release new episodes every Friday. So if you guys want a little bit more, content to consume by us when it comes to both real estate, but also just personal growth, self-improvement, we just focus on different topics each week, but are really focused on just how to improve 1%, get 1% better every single day. And last but not least, 50 plus 5-star Google reviews. So that's enough about me. Ben, let me just share a couple things about you, and then I'd love for you to just also give a little bit of a bio for the audience tonight. Ben's definitely one of the top mortgage lenders that I've personally known in the industry, but also just somebody I really respect a lot when it comes to money management, just understanding how to just manage your money, how to just be very fiscally responsible, and how to make money work for you instead of, spending it all and always playing catch up. Ben works for North Point Bank. They're very unique, where they're actually licensed in all 50 states. So he's a little bit unique compared to most lenders here in Denver, where it's not just local. He can actually serve people all over the country. And he's been in the industry for, about 15 years now? I know your current role, you've been in that for maybe 8 or 9, or it's coming up on 10 years, right?
Yeah, going on year 9 for my current role. And then I've been in the industry since 2006, which is when I graduated from University of Colorado at Boulder. So almost 20 years.
That's great, man. And just talk through a little bit about like what maybe some of your specialties are. I know you're really good with first-time home buyers, which is great for our audience tonight. What else do you kind of specialize in?
Yeah, my competitive advantage as a lender is what makes me so unique is my professional skill set. I've literally done everything in mortgage. So I've worked as a processor in the closing department. I've worked at the rate lock desk, the secondary marketing department. I've spent time in management. I was a mortgage underwriter, which is really, really important, for about 10 years. The mortgage underwriter is the one that goes through and reviews all of the individual applicants' financials. So the underwriter is looking at tax returns, bank statements, W-2s. If someone is self-employed, they're going through the business tax returns. And so that's where a lot of the foundation of my skill set is built off of, is that underwriting experience. And the reason that's important is because I know, once I get all the documents from the customer, how to correctly structure them into the correct loan that's going to be most appropriate for what they qualify for, aligned in tandem with what their goals are. And so because of that, it allows me to provide a much higher level of customer service to them, and then also help to streamline the overall process.
That's great. And I see you posting new 5-star reviews all the time on your social media. Do you have like a number count at this point of how many you've got?
Yeah, I was just looking at that, but I believe it's around 154 as of this past Friday. Yeah.
And we're not going to go into it too much on this masterclass tonight, but For anybody out there tonight that's listening, or I should say watching tonight on the Masterclass, Ben's also an expert when it comes to short-term vacation rentals and just real estate investing. He's got several different properties that he has as income-producing properties in different states. So if you guys have any maybe more specific questions on that, he's another great resource just to reach out to and maybe learn a little bit about how he creatively finances a lot of those deals personally, as well as for a lot of his clients. So a great resource for investors out there too.
Thank you.
All right, guys. So tonight, we're going to talk about several things, as I alluded to at the beginning, but talking first though about just the local Denver market. Rates and inventory right now, as I said, we're right at 7%. It was 6.96% when I checked this morning. And also we're seeing a lot higher number of active listings. In fact, looking at last year compared to this year, we're up significantly on just the amount of inventory right now. It's definitely a buyer's market just because there's a lot more sellers than there are buyers. So buyers, you have ability to negotiate a bit more. I saw a statistic actually earlier this week saying that I think it was almost 50%. It was like 45% of recent transactions had some type of seller concession. So sellers are doing price adjustments. They are being forced to, I think, give a little bit, and understanding that they need to maybe bend a little bit when it comes to negotiating and getting the price down, or at least getting some concessions with different aspects of the deal once you're under contract. So it's good news for everybody on the call tonight that's a buyer. As far as the local market, just wanted to put together a few statistics that I compiled this morning to put together for you guys tonight. First off, just with inventory and market demand. So this is for the week of May 21st to 27th. The way I pulled this data, there's a group here in Denver called DMAR, Denver Metro Association of Realtors, and every month they provide the data for the previous month. They don't have the full May statistics yet. I should have that in the next day or two. So what I did is I just pulled the most recent, which was this past week right after Memorial Day weekend. So May 21st to 27th. So the inventory, slightly fewer new listings. This last weekend had fewer new homes hit the market than the week before, but definitely still more than this time last year. Overall, definitely more homes available right now than in early June of last year. Even though there are quite a few coming soon listings that have dipped a bit from last week, there's still a lot higher number than this time last year. So kind of a repetitive theme here. There's a lot more inventory than this time last year. And then the odds of selling, because there is more competition, this is affecting the odds a little bit. Homes are slightly less likely to sell within 30 days compared to last year, last June. As far as buyer activity and demand, surprisingly, a very busy Memorial Day. Usually busy. Usually Memorial Day weekend is not that busy. Usually it sees a little bit of a drop with buyer activity. However, this year was different. We saw a lot of home sales over the past week. Home sales only dipped slightly, about 3.4% compared to the previous week. So that's a lot smaller drop during that holiday weekend than usual. And showings were down a little bit, about 11% week over week, but still a lot stronger than this time last year with Memorial Day of 2024. And then a big jump since last year. Again, showings rose 47% and home sales increased almost 38%. So really big jump from last year on a few of these statistics. Then a couple more to share with you. Time on market. So homes are taking a little bit longer, as I said a second ago. They stayed on the market a bit longer just due to the higher inventory. I think that's one of the main reasons. Also some probably uncertainty with the buyers out there right now with the higher interest rates and just a little bit of the unknown with the economy and just where we're going for the second half of this year. Homes typically had about one showing per week, and it took about 12 to 13 before a home went under contract. And then the last couple stats to share, increasing price drops. So almost half of the homes that recently sold had at least one price cut. Sellers who did lower their prices, they made deeper cuts than previous weeks. And I think that's just understanding that they're kind of coming to the end of the busy spring selling season. So because of that, maybe they're making a little bit larger price adjustment to factor into that. More than half the homes sold without needing any price reductions. So it's like 50-50 right now of how many did and didn't have a price adjustment. And just keep an eye out for more price reductions and potentially an increase in activity as we head deeper into the summer and into the month of June. Ben, is there anything that you maybe want to add to the stats that I just shared with everybody? Anything that you've been noticing on your end from a lender side?
Yeah, I think the biggest thing that I'm noticing is just to back up some of the data that you shared is that it's, for the first time in really 10 to 12 years, it is a very, very strong buyer's market. So what I'm seeing on the lending side is buyers are successfully able to negotiate seller concessions, as you mentioned. And keep in mind that those seller concessions, what that is it's a credit that the seller is giving the buyer. So a seller concession can be used for so many different things. It can be used to pay for all of the closing costs. So you can have a buyer, they come into closing with only the down payment out of pocket, and the seller pays for all of the closing costs. It can also be used to pay for things that are referred to as prepaids, things that are going to be due at the time of closing, but aren't considered a closing cost. So what that would be prepaid interest, setting up the impound account for the property taxes and the homeowner's insurance, paying for that annual insurance premium 1 year in advance. The seller can pay for that as well with a seller concession. It can also be used to buy down the interest rate, either on a permanent buy down or a temporary buy down. Right now, as you mentioned, affordability is a really big deal. But if you can get the seller to contribute a concession or a credit to buy that interest rate down, it can make things a little bit more affordable for the buyer. And then also the last thing would be price reductions as well. I'm seeing that. So all of that together, it's very, very exciting. Yes, there are some concerns with the market. Interest rates are a little bit higher. I certainly understand that. But if you are a buyer, this is the most leverage, the most negotiating power you've had in a very long time. So know that, own it, and make sure that you're working with a competent real estate agent that's not afraid to actually do some negotiating and put some of these requests in on your behalf.
Yeah, very well said. So before we move on, also want to share with you guys, and I'm going to, at the end of the call tonight, I'm going to be sending out an email with a bunch of free resources, links, all of Ben's info if you guys want to reach out to him directly afterwards. But one of the things that's included in this email is I'm giving you guys free access to this 5-video series that goes through the entire home buying process from A to Z. It's over 2 hours of content. So if any of the stuff that we're going over tonight, if you feel like you want to get a little bit more knowledge and dive a little deeper into it, there's definitely a video on that. So I'm going to be sharing the link for you guys to access this at the end as well. And just definitely invite you guys to check it out. It's got a lot of good stuff in there. So Ben, I know we did this last masterclass. Maybe you could do it again for the audience tonight, is just kind of running through real quickly just the buyer's roadmap, just talking through kind of the big steps that, if for maybe anybody that's never bought a home before, just to kind of give them a little bit of an education on this, and even people that have bought or sold in the past, just maybe a little refresher.
Yeah, I love this diagram here because, if you are a first-time home buyer, you've never gone through this process, there are so many different things to consider. How do you even make an offer? How do you get qualified? So really, there's going to be 8 really important steps, and those are outlined here on this buyer's roadmap. So number 1, meet with your real estate professional. That is going to be the person that's going to represent you. They're going to be helping facilitate writing offers. You're going to meet with them initially. Step number 2 is you want to get pre-approved for your financing. Remember, getting pre-approved, it doesn't obligate you to purchase. It doesn't obligate you to go through the loan. What you're really doing is educating yourself and knowing what you're qualified for and what your purchasing power is and what loan options you may have available. A lot of times folks have misconceptions. They think they have to put 20% down. They may not understand that they qualify for some income restricted down payment assistance or reduced down payment first-time home buyer loan programs. They are out there. After you're pre-approved, you move on to step 3. That's where you're going to start your home search with your real estate agent. Once you've identified a property, you're then going to move on to step 4. You're going to make an offer. Your real estate professional is going to help you write up the offer. You're going to include dates, deadlines, earnest money. At that time, you'll put in what your offer sales price is. You can also request seller concessions right on that initial offer. So something to keep in mind. Number 5 is kind of that same step. At that point, you'll go through some of the negotiations and go under contract. Number 6, you'll go into escrow. That's when your earnest money will be due, and then the title company will become a party to the transaction. During this process, your loan is going through the approval process. It's going through underwriting. You're going to move on to step number 7 there, which is finalizing all of the final paperwork and the final details. And then the most important and exciting step is step number 8, closing day. And that is where you're going to be signing all of your loan documents, real estate documents, and the ownership of the property is going to be formally transferred over.
Yep. And all of that can typically happen in about 30 days. That's kind of the average. Sometimes it could be a little bit longer than that, sometimes a little bit less if it's a cash deal. So lot that goes into this once we go start looking at homes and, just kind of go through this whole entire process. And I should kind of rephrase that. The 30-day average, that's once you go under contract. The contract to close is typically about that 30-day period. So we're going to talk, though, about just the 5 main, kind of the biggest steps, in our opinion, of the home buyer journey: getting pre-approved, finding the perfect home, crafting a winning offer, navigating the contracts, dates, and deadlines, and then that closing with the final walkthrough the day of. So starting right off the bat with number 1, getting pre-approved for a mortgage. And I'm going to let kind of Ben handle this first step a little bit more than myself, since he's the expert on the mortgage and just this financing aspect. Just a slide just showing again the rates that we saw as of yesterday, right at that 6.96 range. Ben, why don't you just share a little bit about this first step?
Yeah, the first step, getting pre-approved, keep in mind that it's always a 2-step process. So the first step is going to be completing the online loan application with your lender. That'll include you as the applicant. You're going to go through and you're going to give a 2-year residence history where you've lived for the past 2 years. You're going to give a 2-year work history. You're going to outline what your current gross income is. You're going to list any assets that you might have. So any other liquid assets, checking, savings, retirement accounts, you're going to put that on there. You're going to also include your personal information, your legal name, date of birth, social security number. At that point, that's going to give your lender the ability to do a credit pull. Now, most lenders have the option to do either a soft pull or a hard pull. And the way to determine what's appropriate is based off of your kind of what your time frame is. Typically, the mortgage pre-approval is going to be good for 120 days. So if you're looking to purchase in 120 days, which is 4 months or less, you're going to want to go with the hard pull. But if you want to see what your options and you have more of an extended outlook, you may want to consider a soft pull and just talk to your lender about that and have that conversation with them. And then the second step is the lender is going to ask you to send in all of your financial documents that are associated with the application. So if you are a wage earner, meaning that you get a salary or an hourly rate, your lender is going to ask you to send in your 2 most recent pay stubs, your W-2s for the past 2 years. So in this case, that'd be your 2023 and 2024 W-2, your most recent asset statements. So your most recent statement for any checking, savings, retirement, investment accounts. And then at that point, once your lender will be able to determine what your purchasing power is, and then also really go over all of the financing terms and what loan programs you may be eligible for. And the reason that this is so important is again, you just want to know what your options are. And sometimes you may have several options. And when you do have several options, that's always a positive thing, because in some cases a property may be approved for conventional, but it may not allow FHA. In other cases, you might want to do a temporary buy down. There's different ways to do that. There's different loan programs. And when you're going through the pre-approval process, you don't have to decide right that day what loan you're going to select, but you're just, again, identifying options. You may be eligible as a first-time home buyer for some first-time home buyer programs, reduced down payment assistance. And so if you're working with a competent loan professional, they'll be able to let you know what programs you're eligible for. And so that way you can make an informed financial decision based off of what your goals are.
Very well said. There's obviously a lot of stuff that Ben just shared with you guys as far as just what you're going to need to compile and put together. He already kind of went through a lot of this stuff, but just to kind of refresh you guys one last time, that proof of income, employment verification, credit history, any assets you might have, as well as any obligations with debt, car payments, student loan debt, anything like that. You're going to have to put together that down payment, that pre-approval application. And then once you actually identify a house, you're also going to need to provide your lender with the property information. And that's really important because there's some other aspects than just the price of the home that get factored into this. For example, the HOA, if there is one. HOA is a homeowners association. If you have a $350 a month HOA fee that you need to pay, that's going to need to get factored into the amount that you're qualifying for your loan. Is there anything else that's a big one other than the HOA, Ben, that you see quite a bit?
I would put the homeowners insurance on there. And the reason for that is because the insurance industry is just going through rapid transformation right now. So there are some cases, depending on the individual applicant's claim history, if they've had any recent claims, their credit, et cetera. In some cases, there can be a wide variance in regards to what that homeowner's insurance premium is. Now, what's great is that when you're going through the process, you as the home buyer, you can call your agent and get a quote right over the phone. They can email that to you, and you can get multiple quotes from multiple different insurance companies. So that's something else that I encourage folks to be proactive on is, getting an idea of what that homeowner's insurance premium is going to be. And then if needed, go ahead and shop that around a little bit during the pre-approval process.
Mm-hmm. So we shared with you guys a bunch of stuff that's going to need to get compiled and put together. Now, this is, I think, just as important, if not even more important. And this is about things to not do after you've submitted that application and applied for a mortgage. So, Ben, give us a little rundown on these main 5.
Yeah, and the reason these are so important to not do after you've been pre-approved is because if you do any one of these things, they could potentially disqualify you. They could void your pre-approval. So you want to be very aware. You don't want to change banking institutions during the transaction. If you have your down payment in one bank, you want to leave it there, and you don't want to move it to another bank or close that and open a new bank account. It can just complicate things extensively. Another big one is don't co-sign for any types of loans for anyone. If you co-sign, that debt, even if you're a co-signer, will have to be included in your debt profile. So if you co-sign for a loan on a family member for a car and the payment's $500, well, even though they're going to be making the payment on that, if it's on your credit report and you're a co-signer, that now has to be included in your debt obligations, and that can impact your debt to income ratio and your ability to qualify. You don't want to open any new credit accounts yourself individually. You don't want to apply for any new credit. Do not, under any circumstances, have your credit pulled. You also don't want to make any large purchases. Sometimes I'll talk with folks and, they're under contract and they're very, very excited and they want to go, buy all this home furniture and, they want to go pay for it now, but have it delivered in 3 weeks, after they close. And that's not something you want to do because, again, all lenders have debt monitoring services. And if you make any large purchases or if you finance anything, your lender is going to be notified. And then another big one are cash deposits. Remember, your lender will never allow you to use any cash deposits. There are a lot of people that have cash on hand. I'm not a believer of that for several different reasons. I think if you have cash on hand, you want to get it into the banking institution. But if you have $5,000 of mattress money that's, essentially in cash and you're planning on using that for your earnest money, well, you can't just go deposit it into your bank the day before you're going to make the earnest money deposit because more than likely it's not going to be eligible. So these are the things that you want to be aware of. Just so you don't trip up or accidentally disqualify yourself when you're going through the process.
And a few of those examples that you shared are things that could happen pretty easily just out of, for example, a parent just out of their good nature trying to help out. Maybe their kids, not quite able to qualify for their car loan on their own, stuff like that. I could see how this can happen quite a bit and not even thinking much of it at the time. And then it could throw a wrench in things. So definitely really good advice to have on all 5 of those.
Yeah. And I've experienced every one of those 5 with different customers throughout the years. So you want to make sure that you're doing your part to put yourself in the best position possible to close on time.
And then before we move on to number 2, the second step in the 5-part home buyer process, this is something that I really like to always include in every one of our masterclass presentations, because it's something that I did not know much about until Ben really educated me on this. And this is just basically related to your credit score. So your credit score is going to affect the terms of your home loan. A better interest rate, some of the different terms are, relying on good credit score. So the best way to improve your credit score is something that has to do with this credit utilization score. Ben, talk to us a little bit about just how this works, and more importantly, what they can be doing to ensure that they're in the best position possible.
Yeah, I'm so glad that you brought this up, because most people, they just don't understand how their credit score is calculated. They falsely believe that as long as I make my payments on time, that's really all that matters. But that's not how credit works. The number one factor in factoring in your credit score is what's known as credit utilization. So what that is, for example, is it's how you manage your revolving credit. So if you have a credit card and the limit on that credit card is $10,000, but you have a credit card balance of $8,000, your credit utilization in that example would be 80%. Now, as soon as that credit utilization goes over 30%, the credit bureaus are going to start to significantly and adversely bring that score down. So you really don't ever want to have a time where your credit utilization goes over 30%, because it's really, really going to start to deteriorate your score. So my suggestion is to make sure that you're always keeping that, that credit card balance under 30% on all of your revolving accounts. So that would be any of your credit cards, Visa, Mastercard, American Express. It would also include other revolving accounts, in-store charge card. If you have a Costco card or a Sam's Club card or a Best Buy card, those are also considered revolving accounts. And then also home equity lines of credit as well. Those are also lines of credit that are considered revolving. What revolving means is that you can borrow against the line of credit. So for example, on a credit card, you make $5,000 in purchases, you pay it off, but then you can borrow or use that again. That's also how home equity lines of credit. So it tells the bureaus how responsibly you're managing that credit. And again, it's the number one most important factor, other than timely payments, as far as calculating your credit score.
Wow. Just on a side note, I'm just asking this more out of my personal curiosity, but is there any sort of regulation on having it be 30%? Like, do you think that with how everybody's kind of on harder times right now, with the economy being a little bit more challenging for the majority of Americans, you think there's ever a chance that maybe that 30% might change to 35% or 40%? Has it been 30% for as long as you've been aware?
Yeah, the higher the utilization rate goes, the bigger impact on the score. Now, the way that the bureaus, the guidance they have given is that if you're under 10%, at that point, that's considered A++. Kind of the unwritten rule, and what they do is they will share guidance, but they won't give you direct guidance. And so they'll kind of just give you, they'll share pointers. If you go onto some of your banking apps, for example, like I have Chase Bank, and you click on the credit journey there, it'll give you some of the same information as far as how, what all the different factors that compromise your score. So every bureau calculates their score a little differently. It might be 35% with one bureau, 30% for the other. And that is a good question. I'm sure they probably do update or tweak things over time based off of just kind of the overall economy and market. But right now, for example, America is carrying a lot of debt, and it is a little bit of a concern. So, like, for example, our U.S. debt just got downgraded recently, and so there's economy factors, there's government factors, how much debt the government has, and then there's the individual consumer. When you look at the individual consumer, I think one thing that's also important to consider is just the amount of student loans, credit card debt, auto loans, and that's kind of what the concern is that the American consumer in 2025 has had more debt really than they've ever had at any point in their lifetime. So that's why understanding some of this is so important.
Mm-hmm. Yeah, thanks. That was very interesting. Okay, so that part's done. Now we're going to talk about the second step, which is finding the right home for you. And a couple things that I'll share on this topic. First off is just what really can help a realtor is having this relationship with our clients where communication is at the forefront. And what I mean by this is having a very clear understanding as a buyer of what is the most important to you and whoever else you're buying the home with, whoever else is going to be living in the home. And a good way to do this, a good little kind of some homework to give you guys if you haven't thought about this before, is talk through with whoever else you're going to be living in the home with an example of what are some must-haves, what are some nice-to-haves, and if there's anything that's just a complete deal breaker. So when it comes to must-haves, one that I often use is just something simple like the number of bedrooms. You know, if you're maybe a young couple that's just starting out having kids, and you know that you're going to want to be in this home for at least the next 10 years, and you only have a, 2-bedroom house currently, you know you're going to want to have at least a minimum of 3 bedrooms. So each of your 2 kids can have their own bedrooms when they get older. So 3 bedrooms, that'd be an example of a must-have. Another must-have could be, something to do with, maybe it's a backyard, or maybe it's a certain school district. Maybe it's a type of home. You want to have a home that's not going to require a lot of elbow grease and home maintenance. You want something that's turnkey, meaning it's either a brand new home, or maybe it's at least a home that's new enough where you're not going to have any unforeseen, fixes and repairs that are going to need to be done in the near future. Nice to have would be something that's not completely necessary, but it's important enough where you really would like to have it, or it would be nice to have. And one that I often share here, especially for the people on tonight that are from out of state, is regarding your garage. So out here in Colorado, when you guys move out here, you're going to find that there's a lot of hobbies, a lot of outdoor activities that you can get involved in. And a lot of these end up requiring a fair amount of gear, a lot of equipment. So skis, ski boots, poles, mountain bikes, canoe, I don't know, whatever it may be. There's just a lot of stuff that Coloradans end up acquiring because we all live out here for the same reason, for the most part, which is just to enjoy and get involved in the great outdoors that we have here in Denver and in Colorado. So what happens a lot of times with a lot of my clients is, they've got 2 cars. Let's just say it's a husband and wife. They have 2 cars, and they're knowing that, because of that, they're just going to want a 2-car garage. Well, that 2-car garage is going to start getting filled up with bikes and all that other gear that I mentioned. And all of a sudden now they can't even fit both cars in the garage. So a nice to have would be an example of, even though it's just a husband and wife, maybe you guys want a 3-car garage. That would be really nice to have, even though you're only going to have 2 cars. So that'd be an example of a nice to have. And then a deal breaker, that's going to be something that's typically having to do with maybe a certain school district. Maybe you currently already live in Denver and you're in the really, really popular, highly rated Cherry Creek School District, and you want your kids to stay in that same school and be able to continue with the same friends they've made. So a must-have or a deal breaker might be you want to make sure that you're finding a home that's in that same school district. So just putting down on paper a list of some of these must-haves, nice-to-haves, deal breakers, that can really help start to guide myself or whoever you're using as a realtor to just make sure that we're kind of narrowing our search and really only providing options that make sense. You could have a home that is beautiful on Zillow and it looks awesome. It's got a great layout. Everything's great. But if it's in the completely wrong part of town, then it's not even worth wasting our time looking at it. So that's really important. And then the other big one I want to share with you guys before moving on is another exercise, which is understanding that there's 3 main characteristics of a home during this home search process. And most of the time, 2 out of these 3 are achievable. Sometimes we'll hit a home run and we can find a home that hits all 3 of these, but it's kind of important to understand that typically you're going to have to give a little bit in order to get the other 2. So the 3 items or the 3 characteristics are price, location, and condition. So which 2 of these 3 are the most important to you? So as an example, let's just say that you have a pretty firm price where your budget you want to spend on a home is $500,000. And the location, you want it to be in a really popular part of Denver like Sloan Lake. Well, at that price point and at that location, the condition of the home is probably going to have to be a little bit of a give and take. You're going to probably have to buy a home that's older, might require some updates, maybe a little bit of sweat equity, meaning that you're doing some of the updates and repairs yourself over the next few years. Another example, though, would be, let's just say you really want to be in that Sloan Lake location, and you also really want to have a newer home that doesn't require a lot of this upkeep and maintenance. Well, if that's the case, you're going to have to understand that that's going to be probably a higher price point. So understanding which two of these three are the most important and sharing that with your realtor can really help us, again, just kind of narrow down the search a little bit, make sure we're casting a net that's only providing you guys with options that make sense. So those are just a couple kind of entry level, kind of first exercises that I do with anybody that I'm working with. And again, for the out-of-staters on the masterclass tonight, really understanding that from a 10,000 foot view, what's really the most important initially is understanding what area you want to be in. Now, I know I shared that those three things: condition, price, and location. Location would be an example of area. But I think what's also good to do is just to start, even if you're not seriously considering moving to Colorado, or maybe you already live here and you're just considering what parts of town you might want to live in. There's a lot of great resources I have on my website that I just would love to you guys take for free and start taking advantage of. If you go to my website, adamsellsdenver.com, I've got this interactive map. You can see it on the little laptop screen there, where I've got 20 of the just kind of the best top neighborhoods in Denver, pretty much every neighborhood in Denver. And what you're going to be able to do is you can click on any of these individually. It'll give you a lot more demographic info, the type of homes that are available, just a lot of really valuable info that if you aren't familiar with the area, that at least might be able to steer you in the right direction, or at least you can identify maybe 2 or 3 areas that are interesting to you. And then we can kind of talk through those and kind of go from there. So the website's a great option, as well as the YouTube channel. Look up Living in Denver with Adam on YouTube. You'll find me that way. And then also I've got on my website some other stuff too. I've got neighborhood spotlights where I just do a little bit more in-depth front and back. It's almost like a flyer, but I have it for over 50 neighborhoods. You know, the best farmers market, restaurants, bars, best trails in that area. So if you guys start to identify some areas you're interested in, that could be another great resource for you. And then last but not least, I have a locals guide to Denver. So definitely anybody that's from out of state on tonight, you want to grab a free copy of this too. It's just, again, going a little bit more in depth on some of my personal favorites. And it just shares all of that kind of good stuff, like, again, parks, schools that are in the area, what kind of homes, just everything you're going to need to know. All right, Ben, before I hit step 3, is there anything you wanted to add to that?
You know, I just want to add that step 3, this is one of my favorite parts, crafting a winning offer. So important. And let me just lead you in here. There's a lot of buyers out there that they think in order for them to win, the seller has to lose. And usually that's not crafting a winning offer. Crafting a winning offer is finding a way for the buyer to win and make sure that they're meeting their goals, but also being aware of what the seller's goals are. Yes, as we talked about earlier, you as a buyer, you have more leverage than you've ever had over the last 10 to 12 years. And you absolutely want to make sure that you take advantage of that. But at the same time, you want to make sure that you are aware of what the seller's goals are. And when you are, you're able to craft a winning offer to where you can not only get the offer accepted, but make sure that you get the things that you want and that you need with the offer.
Yeah, the offer is a good way to look at it, is it's kind of setting the tone for the next 30 days once you go under contract. So if you are really bullish and you get the offer accepted, but it's very demanding and very one-sided, then good chance you're going to have some uphill battles throughout this contract to close process, where when you get to the inspection phase, for example, the seller might be a little bit more kind of standoffish, or maybe not as willing to concede to a few requests that you have. So having it be really a win-win from day one, from this first point, which is the offer, that really does help out, not just with getting it accepted, but also just helps it become a much more smooth process all the way until the closing. And
yeah,
the offer.
Oh,
Sorry, Ben.
I was just going to interrupt really quick. And, what I was going to say, Adam, is one strategy that you have incorporated that I absolutely love is you're one of the few agents that I know of that is willing to pick up the phone, call the listing agent, and have that conversation with the listing agent. What is your seller looking to accomplish? Do they have any specific dates that they're looking to close on? Do they need to be out of the house at a certain time? Are they requesting a specific dollar amount for their earnest money? These are all small and usually pretty simple things, but you're asking those questions. So when you're crafting the offer, you can make it as attractive to the seller as possible while still also representing your buyers. And that's exactly how you do it.
Yeah, you guys got to realize that there's a lot of reasons why a seller is motivated to sell, and you'd be surprised that oftentimes it's not price. There's a lot of things that happen in life. Maybe it's a divorce, maybe it's the kids are graduating and the family wants to downsize. Maybe it's they lost their job. A lot of things sometimes are negative related, like divorce or losing a job, where getting a little bit of that info can really help out a lot when it comes to, like Ben said, what's being put into the offer to make it a win-win for everyone. So as an example, let's just say it's a divorce. Well, more than price, they probably just want the offer to include something with very expedited dates and deadlines. They want to just get this behind them as soon as possible. If it's something like the example of a family that maybe has their last child graduating from high school and they want to downsize, well, let's just use this as an example. Right now, we're in the beginning of June. Last month, a lot of high school kids were graduating. So I had a deal last month where we were offering a post-closing occupancy to allow the current seller to stay in their home until after their child graduated. This was, very simple to put into the offer. And basically it was just an extension of the date for closing, as well as this next line item you'll see, which says PCOA, post-closing occupancy agreement, where basically we were allowing the sellers to have the closing still be earlier, so they're able to get their money and then be able to buy their next house, or at least write an offer that is more attractive and doesn't have a bunch of conditions, which we can talk about here in a second. But also at that point, they're still in the home for another 30 days. And as acting at that point as really a tenant, you now own the home and you're basically a landlord, so to speak, with the sellers now as your tenant. So there's some creative different ways to write an offer like those that can be a huge difference from what other people are putting into their offers and really make yours stand out. And this, before moving on, the last thing I'll say is just for anybody that's maybe a first-time home buyer, understanding that with offers, there's basically three outcomes. The first one is hopefully what's going to happen, but doesn't happen all the time. And that's just their sellers are going to accept the offer as written. And that just means whatever we've put into our offer, we're going to send it over, and the sellers are just going to say, you know what, that sounds great. We'll sign and we're under contract. More commonly, though, is the second option, which is, the second option is declining the offer. We hopefully don't see this one as much, but this is just, oftentimes this will be if the offer is written poorly or it's just a huge reach. Maybe we're offering $50,000 less than what they're asking, and it's just so far apart from what they're asking that the seller doesn't even want to rebuttal. They don't even want to counter. They just say, you know what? No, thank you. We're going to pass. I actually have never had that happen to me before, but I think reason for that is because I'm doing my due diligence. I'm finding out the motivation. I'm finding out the reasoning behind selling the home and crafting this winning offer. But the third, which is probably the most common, definitely for me, it was most commonly seen, is what's known as a counter. So that just means that we put an offer together, we send it over to the sellers to review, and maybe there's a couple things that they want to adjust. Commonly it's maybe the price. Maybe they're going to come up a little bit on the price. Maybe it's some of the dates and deadlines that they want to adjust, stuff like that. So this is the most common, this counter offer. But what's really important just to understand is that, it's not a failure or a dead deal if they don't accept your offer. More commonly, what's going to happen is they're going to counter, and then we're going to just kind of work through those and hopefully still get to a point where everybody's in agreement, and we're going to move on to being under contract. All right, Ben, you want to just maybe chat on the next one a little bit about step 4? And I say this kind of inspection and appraisal. These are two separate things, but they happen around the same time. So I grouped them together in this step 4 because they both are really important.
Yeah, I'll chat in regards to the appraisal, and I'll let you touch on the inspection side since that's
Okay.
more real estate related. But in regards to the appraisal, during the underwriting process, again, you've gone through the pre-approval process, you've written the offer, the contract has been accepted either through initial acceptance or the counter offer. You're now under contract. The lender is going to send out the loan disclosures. You as the buyer are going to sign those, and then that is when the application will go into underwriting and the appraisal will be ordered. So essentially what the lender is doing, they're hiring an independent third party to appraise the home. And the appraiser is going to go out to the property. They're going to take measurements of the property. They're going to go in and evaluate all of the interior. They're going to go into all the bedrooms, the bathrooms, the living area, the closets. They're going to take photos of everything. They're going to document all of this as part of the appraisal report. And then they're going to go outside and take measurements. They're going to take photos of the backyard, the front yard, all of the sides of the home. They may even go up in the attic. And then they're going to give an opinion of value. And the way that they do that is based off of two things. Number one is the property characteristics. So the square footage, how many bedrooms, bathrooms, and then they're going to compare that to what is selling in that specific market. Normally, what they're going to be looking at is for recent comparable sales that are sold within a 1 mile radius that are no older than 6 months old. Now, in some occasions, or circumstances, depending on how dense the market is, there are exceptions to that. The appraiser does have the ability to go past 6 months or greater than a mile out if there is a valid reason for that. But that's kind of the general rule of thumb there. So based off of what's selling, based off of the property characteristics, they will then come up with an opinion of value. And ultimately, what the lender is looking for is they want to make sure that the home is worth as much as the buyer and seller have outlined in the contract. So they want to make sure as the lender, because keep in mind, this is the collateral for the loan. And that's why the lender is doing all this due diligence, is they want to make sure that the collateral is there to protect their investment as the loan. But then also a benefit is that, it's also going to be protecting you as the buyer. Now, if the appraisal comes in higher, so say, for example, the contract sales price is $500,000 and the appraisal comes in at $520,000. Well, that means that the buyer has $20,000 of instant equity. They are not required to disclose that to the seller. You as the buyer, if your appraisal comes in higher, you can feel fantastic. That means that you're getting an awesome deal and your real estate professional did an amazing job of writing up that contract. Something like Adam would do. Now, if the home appraises for less, so in that same example, if the home is if the sales contract is $500,000, but the home appraises for $480,000, well, at that point, as outlined in our Colorado real estate contract, you're going to have the option of going back to the seller and asking them to, or having the option to ask them to reduce the sales price. What I'm seeing in our market today, I'm not seeing a lot of homes appraised for under the sales price. In fact, it's been at least a year since that's happened. So that's good. That's a positive thing when appraised values are matching or above what the actual sales price is. So that's kind of a background of what the appraisal is and how that process works.
And it's not as common, but a lot of people today, don't know where the money comes from, but a lot of people do put out cash offers. And sometimes in a cash offer, you can waive the appraisal. So if there isn't a mortgage, you can even waive this altogether. There are some, pros and cons to this. A pro from a buyer's perspective is that's going to make the offer even more attractive because that seller has one less speed bump to get over. One con or one concern about waiving the appraisal, though, is that you could potentially be overpaying for your home and you're not getting that third party valuation of the home just to ensure that you are paying what's appropriate for the home. So there is opportunity sometimes to waive the appraisal, but only if it's really what makes the most sense for that specific situation. And then as far as the home inspection goes, for, again, anybody that's from out of state that's on tonight, or even people that are here local in Denver that maybe aren't familiar, in addition to doing a home inspection, there's two kind of what we call an accessory or an additional inspection that I always recommend have being done. The first one is what's known as radon, which is a odorless gas that exists typically in the subfloor, the area between the basement or the lower level of your home, between that and whatever the foundation of the home is. So typically there's a crawl space in a lot of homes, especially older homes. And in that crawl space, the air can sometimes get trapped and can have a little bit higher levels of radon. So what will happen is during these inspections, we'll pay about $75 for a radon test to be done. And this is a great way to hopefully it comes back low, but if it does come a little bit high, this is a really easy way to get a concession by the seller. So radon typically ends up costing about $1,500 to install a radon mitigation system to get that radon gas out of there. This is just, something that's really important to always be aware of and have done on the home if it doesn't already have that radon mitigation system installed. And then the second one is a sewer scope. So a sewer scope is another third party that comes out, they run a camera down the line that connects your house to the main public sewer line, typically in the middle of the road that your house is sitting on. And they just run this camera down. And again, Colorado, we have a lot of beautiful trees out here, but a lot of these trees have roots, and those roots kind of do their own thing and have a life of their own, and sometimes can encroach on the sewer line. And over time, especially if the home is older and that sewer line is made out of clay, can potentially damage that sewer pipe, or it could at least not have the correct drainage where it's got a downward slope. And in that case, sometimes it needs to either be flushed out or it needs to be dug up and repaired. So these are things that, could only cost maybe $100, $150 for a buyer to pay for the inspection, but it could save you thousands by doing it and hopefully catching anything if there is a problem. Sewer scope, I've seen homes that it could be a $15,000 repair if it's, very long line from the house out to the street. So pretty minimal cost up front for a very big savings if something does come up. But home inspections, just to kind of close this one out, I always recommend you have it done, because this gives us a lot of negotiation power when it comes to one of the parts of the contract to close phase, which is our inspection objection and our inspection resolution. An inspection objection is after the inspection is done, anything that we find in the inspection, we can come back to the sellers and say, you know what, these 5 items we've identified in the inspection, we'd like to either have you repair them before closing, or we'd like a dollar amount to compensate us for doing the work ourselves after we become the homeowner. And what I tend to make sure we always include on the inspection objection is anything that's health and safety related. So that radon test would be an example of that. Any smoke or carbon monoxide detectors that maybe are outdated. Maybe there's an issue with a ceiling has maybe a wet spot that could potentially have mold hiding underneath it. Stuff like that's always important to include. But this just gives us, again, an opportunity to maybe get a little bit more of savings for you guys, the buyers, by getting the seller to either give a cash dollar amount at closing or to just repair the stuff themselves prior to. So home inspections, just to close it out, are very, very, very important. And even if it's a new construction home, it's still worth doing, because you'd be surprised how often these new builders are cutting corners. And, I've had sewer scopes done on new construction where they found all kinds of trash and construction debris and nails and stuff that should not be in the sewer line. So you'd be amazed that even with new construction, how often stuff comes up during the inspection. I talked a little bit earlier about how I'm a certified expert in real estate negotiation. I'm going to, just to save time, I'm going to skip over this one, but just understanding that how important it is to really address a lot of these different steps during the home buying process, from this idea of really understanding the negotiation tools that are available for us to make sure we're getting the best deal possible for you guys, the buyers. All right. And then I'll let Ben, why don't you do the last one just to give me a chance to have a sip of my water and breathe for a second. I was kind of going through the
Oh, I'd
last
love to. Yeah. Well, step 5 is the most exciting step, and that is closing and final walkthrough. Now, as Adam mentioned, you're going to do that initial walkthrough, when you're viewing the property, and typically during that inspection period, which is usually 72 to 96 hours after you go under contract. And sometimes there may need to be work that's completed, repairs. On that final walkthrough, that's usually the day of closing or the day before closing. And the purpose of that is you're going to walk through the home with your real estate professional and just ensure that everything is in order on the day of closing. So if there was work that was supposed to have been corrected, or that mitigation system for radon was supposed to be installed, at that point you're going through and you're verifying that. If there was an electrical patch on an outlet that was supposed to be fixed, you're verifying that. So you're walking through to make sure that everything is outlined from the initial contract, and then any amendments, extends, has been completed as agreed in writing before. From there, you'll move on to closing day, which is the day that you're going to sign all of the documents. And that is when transfer of title and ownership of the property is formally going to go from the seller to you as the buyer. Now, when you're at closing, there's going to be several different document sets that you're going to be signing. There's going to be a lot of loan disclosures and loan paperwork. There's also going to be some title documents that you'll be signing. And then there's also going to be some documents that are going to be considered government recording documents that you'll be signing in tandem with the seller. You'll typically close at a title office, and there'll be a title professional that'll be walking you through the closing documents. Most of the time, you would anticipate that your real estate agent is going to be there. Sometimes lenders are there. I always try to go to all of my closings just to support my customers. If they do have any questions, I'm there to support them. Your lender, though, will get that closing disclosure to you at least 3 days prior to your closing date. And the reason for that is because they're required by law to do that. So that gives you as the buyer an opportunity to really look at all those final numbers before closing, just to make sure that there are no surprises. So at that point, your cash to close is going to be referenced. You'll know, you'll already know what your interest rate is, but you'll know what that final payment is going to be. And again, you just want to make sure that everything on the day of closing is consistent with what was disclosed earlier in the transaction. And if you're working with reliable, responsible real estate and mortgage professionals, it will be. After everything's signed, then at that point, the home is yours, and that's when the keys are handed over. You get to take photos. You get to go to the home and celebrate. And very, very exciting day. I remember the first home that I bought back in 2010, and I remember going to the bank to get the cash to close on my day of closing, and just a very, very exciting day. And I can remember those feelings, and it's one of the biggest, most exciting, and best days of your life. So be sure to soak it in.
Definitely. Very well said. All right, I guess those are the 5 steps. Just a couple kind of last items just to run through quickly with you. So we had talked through this already a little bit, but just as a little recap, some things that are really, really important. So 3 big mistakes that home buyers are often making. And hopefully after tonight's masterclass, you guys will not fall into that category. So the first one is just overlooking any hidden costs. Ben touched on this earlier. Just remember that owning a home is not just about the mortgage. There's other monthly and annual expenses you need to factor in as part of your budget. Don't forget about property taxes, insurance, any maintenance that might be done on the home, and also any potential HOA, homeowner association fees. For property taxes, if you guys are from out of state, every state's different. In Colorado, you should be expecting to pay typically around 0.5% as the annual property tax. So if you buy a $500,000 home, 0.5% of that would be about $2,500 a year. However, if you are buying in a newer community, that can be significantly higher. So this is an example where Ben was talking about how with all the different stuff you're compiling and providing to your lender, when it gets a little bit closer and more serious, where you're actually providing the property information, the lender and also the realtor will make sure you understand that the property taxes in that area for that specific home, what they are, and, just be aware of that. There's an area near me in southwestern Denver in an area called Sterling Ranch that instead of that 0.4 or 0.5, about 0.5%, in Sterling Ranch, it's almost 1.5%. So that same $500,000 home now all of a sudden has a $7,500 annual tax bill. So just some things like that are really important to make sure you're aware of and not overlooking. The second one, neglecting the home inspection. I talked about that in a little bit of detail earlier, and I'm pretty passionate about that one. So just make sure that you aren't skipping the home inspection, even if it is a new home. And then third one, this is a big one that Ben and I see a lot, and we always try and do our best to mitigate this with our clients, but just understanding that to have the opportunity to make the best decision possible and really get the best deal possible on the home, understand that you should not ever be making decisions based off of emotion. This is a financial decision. This is something that for many people is the largest financial decision they're ever going to make in their lives. So don't let emotions overrule some of the practical considerations, like where the home's located, maybe the price you're willing to pay, just some of that kind of stuff about the home itself. Just make sure you're not letting your emotions get the best of you. That's a really, really big one. All right, so Ben, let's kind of close this one out. What are the best next steps for anybody that's, ready to move forward?
Well, step number one, go ahead and get pre-approved. Call me, reach out. I'd love to have a conversation. I'm not here to try and convince anyone or pressure anyone into anything. Remember, I'm here as a resource. So is Adam. We're here to share what you may be eligible for, what your financing options are, so you can make ultimately an informed financial decision based off of what you feel is in your best interest. From there, connect with a real estate expert. And there's a great one right here, Adam. He's going to help you navigate your home search. Then you're going to want to utilize your educational resources to make sure that you're making the best decision. So after you've had that conversation with your lender, your real estate agent, you want to know what your options are. Make a decision off of your financial facts, not your emotions. Be disciplined. Write down what your goals are. What is your max monthly payment? How much are you comfortable coming into closing with? Identify some of those things so you have some boundaries as you're going throughout the process. And then stay informed and be patient. You don't have to rush into anything. You don't have to rush in any decisions. Stay disciplined. Stay in control. And, yes, emotions are part of it, but don't let the emotional piece dictate your judgment and your decisions. Find the home that's right for you and find the financing that's right for you.
Mm-hmm. Very well said. So I shared this earlier, guys, but I'll be providing you guys an email after tonight's masterclass with links for all of this stuff you can dive into at your convenience. And if you have any questions when you're going through any of this stuff, feel free to reach out. And you can also, if you don't want to wait for that email, you can also scan this QR code, or you can also just visit my website, and I've got these available there as well for you to download. And Ben and I both offer these free 30-minute strategy calls. You can do it one-on-one with either of us. You can also have a three-way with both of us on the call if you have specific questions about both the lending and the realtor side. But more than anything else, we just want you guys to know that, like Ben said, we're just a resource for you. We'd love the opportunity just to connect and learn a little bit more about your specific goals and strategy and situation that you're trying to achieve. And I guarantee, even if you're not seriously considering buying a home in the next 6 months or a year, it's still worth jumping on a call and just helping just give us a little bit more insight into what's going on in your life. And I know we can provide value in a few different ways, even if it isn't going to be for another year or two that you're seriously considering buying a home. All right, so now it's time for a couple questions. I know everybody's been very good with lasting throughout this entire masterclass tonight. So thank you guys, first off, for just sticking with us. I know there's a ton of information to cover. Ben, I've got a question here from Maria. It's mortgage related, so I'll kick us off with the first question. Hi, Maria. You're just asking what Ben thinks is going to happen with interest rates by the end of this year. Do you think they're going to go up, or are they going to stay around that 7% range?
Maria, that's a great question. I'm going to answer that in two parts. First of all, I read an article today that the Fed has come out and kind of hinted at the fact that rate cuts are still a possibility. We've been hovering right around that 7% range. We've gotten as low as 6.5, as high as 7 3/8 over the last 12 months, but we've been kind of hovering right around that 7% mark. So where rates are at currently is where they've been over the past 12 months. But the Fed did come out and kind of hinted at that, the fact that we are still in line possibly for up to 2 rate cuts later this year. Obviously, there's no guarantees that could happen, but we're all optimistic. But secondly, and this is more importantly than just the actual interest rate, I would look at the scenario as it relates to your budget, your monthly cash flow. I would look at that as a monthly payment, because a lot of times, even if the rate is 7%, if you can afford the payment and you're comfortable with that, then I really believe that's how you should make your decision, not just off the interest rate alone. And part of the reason for that is because, do interest rates matter? Yes, of course they do. But in some cases, the difference between a 7% and a 6.75 and a 6.5% is never as much as people think it is. So if you find the home that meets your goals and your expectations, and if you find a financing program that meets what those goals are, and you're comfortable with the payment and you know what to expect, make your decision based off of that.
Yep, very well said. Let's see here. Got another one on here from John. He's just asking about new construction homes. Is there any different process with buying a new construction home? The only thing I'll put out there on that one is, so you guys, it's so important to understand that 99% of the time, to have a buyer, to have a realtor represent you as a buyer, most of the time the seller is the one paying any commission, any way that I'm getting paid as a realtor. 99% of the time it's coming from the selling side. And what's really important to understand is with new construction, that is always the case in my experience, but they're kind of tricky. They're a little bit sly with how they work, where if you go into a new construction community and for the very first time you go in there, they're going to ask you if you're represented by anybody. If you say no, I'm not able at that point to represent you. Even if you decide you want to buy a home in that new construction community, you can't come back and say, well, actually, I want Adam to represent you. So what happens in a lot of cases is with new construction homes, the buyer is left buying the home unrepresented by anybody. You're not saving any more money by doing it that way. They're not cutting a better deal for you because you don't have an agent. What's happening is you're just relying on your own ability to really, review every contract that's going through this process, and just you're at a disadvantage. And the new construction homes, they know that, and they're going to be pushing a little bit harder probably in that case. So just be aware that with new construction, one of the only differences, in my opinion, is just an understanding that you still want to have representation, and the best way to do that is just to reach out to somebody like myself before ever going into any communities. Or you can even just say you are working with somebody when you go in that first time. Say that you are working with me, even if we haven't formally connected and put together a relationship between the two of us.
We have a question from Bridget for Adam, and she wants to know why homes are sitting on the market a little bit longer than what would normally be expected for this time of year.
Hey, Bridget. Actually, I think I recognize. Hey, you might be from the gym, actually, I think. Hey, Bridget. Good to see you. Yeah, so homes are sitting a little bit longer right now for a few reasons, but I think part of it is there's just a lot of inventory. So there's a lot more options for buyers, and supply and demand. When there's a lot of supply, not quite as much demand, we're kind of a little bit out of balance. So also, I think that, a lot of sellers are still being a little bit stubborn with how much they're asking for their homes, just still a little bit used to what it was like a few years back, where you'd have, put the house up for sale on a Thursday, and by Sunday you'd have, 10 offers, and you'd have your pick of the litter of which one you wanted to take. So I think we're kind of in this kind of uncomfortable rebalancing right now of the market, where I think buyers have definitely a strong advantage at the moment, but I think sellers are being a little bit stubborn on kind of getting to the point of realizing that. So whenever I'm representing sellers, I always really try and hit home that it's really important to always price the home correctly from day one, and not avoid getting into this kind of, what's the right word to use? Let me back up and explain it this way. I saw this earlier today by one of my other realtor buddies, and he was talking about how you kind of look at it almost like a dating app on your phone. So if you kept seeing the same person on your dating app day after day, and you just, kept seeing that same person, they probably become a little bit less interesting, because you're like, what's wrong with this person? Why is nobody dating them? Kind of goes along the same lines with the home. If that home is just sitting and not moving, and you keep seeing that same home over and over again, after, the fifth or sixth time of seeing that home, you might start wondering, well, what's wrong with this home? And you want to avoid that. That's why it's important to have it priced correctly from day one. So I just kind of bring that up because I think a lot of people are not pricing their home correctly from day one. So you're seeing a lot of homes sitting for 30, 45, 60. I mean, heck, I see homes when I'm helping out clients that when we're looking in the MLS, the multiple listing service online, that, there might be homes that are 200 days on market. So it's just important to have it priced correctly from day one. And if you're seeing homes that are sitting, it might be because they did not do that correctly. I think that's all the questions we have. If you guys have any other ones, though, feel free to shoot either of us a message. You'll have all of our contact info at the end of this call. I'll be emailing that to you guys. So with that, you guys, I hope you all have a great rest of your week. Really appreciate, again, you guys joining us tonight. And Ben, I also really appreciate you providing everybody with all of your expertise when it comes to the financial side of this. So thank you.
Yeah, that is my pleasure. And thank you again, everyone, for your time. It was great getting to visit, and we are here as resources.
Yep. Feel free to reach out, guys. We really appreciate it. And if you haven't yet, make sure you guys check out our podcast, The Pursuit of Progress. We'd love to engage with you guys there as well. We'll see you guys later.